Welcome, crypto fam, to the #1 daily Bitcoin pod. In today's show, I'll be sharing the latest Bitcoin technical analysis and quoting Michael Saylor. Inflation is a cancer that has killed civilizations throughout history. Bitcoin is the cure. Preach. We'll also be discussing the world's third largest public pension fund buys $34 million of MicroStrategy shares. That's right. This is a South Korea public pension fund. I'll be breaking this down for you, as well as institutional adoption of Bitcoin ETF surges 27% thus far in Q2, as well as Goldman Sachs discloses $418 million worth of Bitcoin ETF holdings. We'll also be discussing BitDeer to expand operations with $150 million convertible notes offering, pulling a Saylor put. We'll also be discussing sovereign wealth funds could take Bitcoin to 148,000 per coin, according to this researcher. I'll be sharing his insights. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. If you're new to the channel, very important, smash the likes and go ahead and subscribe. Don't be shy with that subscribe, family. It's greatly appreciated. And then hit the bell icon, turn on all notifications, at least so you have a chance of receiving a notification. Shout out Savvy Investor. I appreciate you subscribing to the #1 Day of the Bitcoin Pod. Respect. Today is pod episode number 1732. I'm your host, JV. It's August 16th, 2024. Happy TGIF. Let's kick it off with our market watch, as we do each and every day. You should be able to see on your screen here shortly. Coin360 is pulling up, family. Just a bit of a delay. There we go. So yeah, Bitcoin currently hovering above 58.2, down 2.5% on the day. Solana's the big loser, down 6%, trading back under $138. We have Ether down almost 4%, maintaining above 2,500. XRP, Cardano, and again, most of the major cryptos correcting and in the red. And checking out coinmarketcap.com, the current crypto market cap sits just barely above 2 trillion. Jesus. And the Bitcoin market cap is at 1.1 trillion. We have roughly 74 billion worth of volume in the recent 24 hours. And the Bitcoin dominance is currently 56.1%, back on the climb, with the Ether dominance back on the decline at 15.1%. How high do you think that Bitcoin dom will likely go for this cycle? Do let me know. And checking out top 100 crypto gainers past 24 hours, we have virtually nothing in the green. I guess this, I don't never even heard of this. Tether Gold, I guess that's the gold of Tether. I'm not too familiar with it, but it is up barely 1%. We got Thorchain up 1%, and then less than 1% gainers as the majority of the market is correcting. And in the red, let me know what alts, if any, you are bullish on for the bull. And checking out the crypto bubbles to get a visual perspective on the daily. Virtually everything wrecked, unfortunately. I think there's maybe 3 out of the top 100 actually even in the green. And zooming out on the monthly, it doesn't look so much better. Roughly 95% of the market, wreck city. I mean, big time. A lot of these alts down 20, 30, 40, some of them 50%. For the month. And checking out the Crypto Greed and Fear Index, we're currently rated at 27, back in fear, only 2 points away from extreme fear. Typically, when we reach extreme fear territory, we have a big bounce back. So we're very close. Maybe tomorrow we do get that bounce back. Yesterday, we were a 29, last week a 48 neutral, and last month a 69. 69 G's, baby. And that was agreed, according to the Crypto Greed and Fear Index. But anyways, here's today's Bitcoin technical analysis. We'll also be pulling up the live charts. Headline reads, Bitcoin price bounces 4% as triple death cross. Damn, that sounds scary. A triple death cross? Come on now, guys. Spark sub 50,000 warning. Recall a few days back, we already tapped 49. Will we return? Let me know your thoughts. Here you're looking at the 1 hour chart. Bitcoin rebounded past 58,000, where we're currently above this morning, August 16th, after a sweeping masterclass cost both the bulls and the bears. TradingView confirmed a 4.4% Bitcoin price recovery from the lows of 56,150 the day prior, coming on the back of the latest U.S. unemployment data. The dip posed problems for casual traders, with both buyers and sellers seeing liquidations. The action was captured by order book liquidity data from monitoring resource CoinGlass. In the 24 hours of the time of writing, total Bitcoin long and short liquidation stood at around 75 milli. And quoting Dan Crypto Trades, the analyst, Bitcoin sweeping masterclass today. Look at those unlucky red candles. Whoa, those are pretty massive. That's on the 15-minute chart, though, so they look more severe than they really are. And we also have Crypto Nuevo flagged a tap of range lows for Bitcoin, keeping the pair in a familiar intraday channel, as outlined right here. You can see the range highs and the range lows. Before the sweep, we also have material indicators flagged another death cross, this time of the 4-hour time frame, an event which is said would help the market establish reliable long-term support. Quoting him here, the good news is, one way or another, this has the potential to help the market validate a bottom for Bitcoin or possibly create a new one. And at the same time, Keith Allen suggests that the potential for a much stronger Bitcoin price downside, potentially taking the market not only back to 6-month lows, can be seen at the start of August, but to a rising trend line currently at around 49 Gs. Let me know if you feel the recent bottom of 49 is in, or do you think we'll likely go even lower? Now, looking at the derivative markets, on-chain platform CryptoQuant noted a rare occurrence over the past years regarding funding rates, where they're at their most negative in nearly a year, quoting Eggy Hash, what a username. The funding rates of Bitcoin on Binance have been negative for the third consecutive day, reaching levels not seen since October 2023. The average Bitcoin funding rate indicator that counts the funding rates on all the exchanges is also negative. This means that short positions are now dominating the perpetual market. Negative funding rates reflect spoiling market sentiment, but also laid a foundation for a squeeze of short positions when broad sentiment calls for further price downside. And here you're looking at the Binance Bitcoin funding rates, and that's right, Binance has officially been replaced with the name Binance ever since Janet Yellen made the term famous. And in other news, quoting the Giga Chad Michael Saylor, inflation is a cancer that has killed civilizations throughout history. Bitcoin is the cure. Love that metaphor. So spot on. And quoting Samson Mao regarding this article, opinion, when your opponent calls you a communist, maybe you don't propose price controls. And Samson wrote, the current Bitcoin price might have you feeling sad, but just be thankful that Bitcoin exists. Preach. Imagine a world without Bitcoin where your government is printing money with no end in sight while mulling over price controls as a fix. Just think how hopeless you would feel. And he makes a fantastic point. Now let's check out some of the live charts. Give me a second to pull it up. We're going to pull up via Coinbase, brought to you by TradingView. We're launching the chart right now. We'll get a couple of, or a few different looks, different perspectives. This is the weekly. Let's start zoomed in on the hourly and work our way out. How's that sound? And you should be able to see this live on your screen. Give me a second to change the scene to make it even cleaner for you guys. Should be able to see really good here. There you go. So yeah, Bitcoin hovering at roughly 58,400 at the time of the live stream, live and in the flesh, live chart action Jackson right here for you. There's a rectangle formation. We do have a target sitting down all the way at 53,400 on the 1 hour chart. And zooming out a little, we'll check out the 4-hour chart popping up right here for you guys. Do notice we do have some consecutive greens, but we had a corrective red, and let's see if we can resume green. Prior to that, we had that big red corrective candle just the other day. And zooming out a little more, we'll check out the 1-day chart. As you can see here, live and in the flesh, we do have a green thus far for today. Hopefully we continue the momentum. Yesterday, red, day before red. Before that, green, green, red, green, red, big old green after we tapped that bottom of that 49,000 a few days back. And zooming out for the weekly, we still have the cup and handle pattern. Should be able to see here. Option Command R. Yeah. Okay. So you see a target sitting all the way at 125,500. That cup and handle target on the weekly chart, and we'll also check out the monthly chart. Again, halfway done with August already, family, so we're halfway there. It was looking like we were gearing up for a big green candle, but we're currently correcting back under 60. 60 is a major psychological level that we need to recapture to maintain our bullish momentum. So let's see if we can get back above it. But let me know your thoughts surrounding some of the price action and where you feel the Bitcoin price will likely take us next. But anyways, let's continue with the news, shall we? Next story of the day, let's discuss the pension funds. A lot of the topics today is specifically regarding Bitcoin adoption, ETFs, freaking pension funds, sovereign wealth funds, etc. So this is the theme for today, Bitcoin game theory. This headline reads, the world's third largest public pension fund buys 34 million worth of MicroStrategy shares. Winning. That's right. The third largest public pension fund in the world just bought nearly 34 million worth of shares of MicroStrategy, a Bitcoin buying business intelligence firm. South Korea's National Pension Service purchased 24,500 MicroStrategy shares at a price of $33.75 million. And that was on August 13th, filing with the U.S. SEC. The National Pension Service is South Korea's public pension and the country's largest investor with over 1 trillion won. Which is $777 billion. Good Lord. In total assets at the end of February. So this is massive right here. Almost a trillion. The filing, which details its investments in the second quarter of the year, shows it still holds over 51 million stake in Coinbase, holding 229,800 shares of the crypto exchange. It also has 31 million invested into Roblox. Hey, if you're a parent, I'm pretty confident you know what Roblox is. It's $61.5 million worth of Jack Dorsey's block, formerly known as Square. And thinking ahead, Institute's annual global pension asset study shows Japan's government pension investment fund is the world's largest pension fund in the world, with nearly $1.5 trillion in total assets as of last year. Next is the government pension fund of Norway, with just over $1.3 trillion. Meanwhile, MicroStrategy stock has seen a 92.5% gain thus far this year, climbing above $150 for the first time in 24 years. According to Google Finance, you can see the stock price up 63% now, year to date, and currently trading just shy of $132. The company has been buying Bitcoin since August of 2020, and its August earnings report showed it purchased an additional 12,222 biddies for $805 million in the second quarter. MicroStrategy's latest Bitcoin brought its total holdings to 226,500 BTC, which is now worth roughly $13 billion at Bitcoin's current price. It makes MicroStrategy the public company with the largest Bitcoin holdings in the world, with around 13 times more Bitcoin than the world's largest Bitcoin miner, Marathon Digital, according to CoinGecko. Others, too, think MicroStrategy is a good bet, with exchange-traded fund issuer Definance ETFs launching a U.S.-based fund that targets 175% long daily exposure to MicroStrategy. And I broke that news yesterday in greater detail. If you missed the pod, be sure to check it out. But anyways, Joe, next story of the day. Pension fund adoption, we already know, is pretty lit. Let's now discuss the latest with the ETF surge. Institutional adoption of Bitcoin ETFs surges 27% in quarter two. Not too shabby, eh? The institutional adoption of the spot Bitcoin ETFs saw a significant uptick during the second quarter of this year, despite Bitcoin's recent correction. Institutional adoption of the United States base spot Bitcoin ETF grew by over 27% during the second quarter of this year. Over 262 new firms have invested in spot BITI ETFs, according to Vettel Lunde, senior analyst at K33 Research, who shared the following. According to the 13F filings, 1,199 professional firms held investments in the U.S. spot Bitcoin ETFs as of June 30th, marking an increase of 262 firms over the quarter, as outlined here by the K33 Research. And continued institutional ETF adoption could significantly bolster Bitcoin's price, since institutions hold large amounts of capital that can move crypto markets. Bitcoin needs continued institutional adoption to reach new all-time highs. Institutional FOMO like a mofo. Despite the growing institutional adoption of the Bitcoin ETFs, retail investors are still the largest hodler cohort, according to Lunde, who shares here. While the retail investors still hold the majority of the float, institutional investors increased their share of total assets under management by 2.41% points, now accounting for 21.15% in quarter two. Institutional investors only own 18.7% of the total ETF assets under management during the first quarter of this year. Meanwhile, as we already shared with the TA earlier, we got to get back above that 60,000 psychological level. Currently, we're just above 58.4, 58.5, roughly $1,500 away. It is a weekend. It's a TGIF this year. So let's see if we can continue with a weekend pumpage action. But let me know your thoughts, family. Goldman Sachs. You know Gary Gensler comes from Goldman Sachs. You already know, family. This headline reads, Goldman Sachs discloses 418 million Bitcoin ETF holdings. Not too shabby. That's right. Check it. Global investment bank Goldman Sachs, everyone's favorite bank investment firm, right? Has revealed significant investments in spot Bitcoin ETFs, acquiring 418 million. Why didn't they just up it 2 million so they can say 420? And then I can congratulate and say, hey, happy 420. I mean, that was a big mistake. Just FYI, Goldman, get your act together. By the second quarter of this year, according to the bank's latest 13F filings, as big as Bitcoin ETF position is a 238 million stake in BlackRock's IBIT, which is their Bitcoin trust. Goldman also took sizable stakes in Fidelity Wise Origin Bitcoin ETF and Invesco Galaxy, so they are they diversified. And smaller positions in several other Bitcoin ETFs launched in January. While Goldman expanded its crypto investments, rival Morgan Stanley reduced its Bitcoin ETF holdings. Haha, suckers. 270 million now to 189 million, with the most reduction coming from the sale of shares of the Grayscale Bitcoin Trust, GBTC. This strategic shift reflects a cautious approach by Morgan Stanley, which continues to allow clients access to Bitcoin ETFs, especially from BlackRock and Fidelity, which are the two biggest here in the United States, and they currently hold the most Bitcoin as well. However, BlackRock uses Coinbase as their custodian, as most of the ETFs do here in the States. However, Fidelity, I believe, self-custodies their own Bitty, so more power to them there. Meanwhile, hedge funds are taking a more aggressive stance in the crypto market. Millennium Management, a major player overseeing $62 billion, is the largest holder of shares in BlackRock's Bitcoin fund, though it has halved its position since May. Other hedge funds include Cupola Investment Management and Point72 Asset Management have also made substantial investments into the spot Bitcoin ETFs. The increased involvement of institutional investors is indicative of the growing acceptance of crypto as a mainstream asset class, despite the volatility in the broader markets. So there you go. BitDeer to expand operations with 150 million convertible notes offering, another Mikey Saylor put for the books. That's right. This time a Singapore-based crypto mining firm. And shout out Harris Jawed. I appreciate the super. Any thoughts on Jasmine when it'll pop? I honestly don't have any thoughts on it, but appreciate the super, family, and thanks for supporting the stream. So yeah, the Singapore-based crypto mining firm BitDeer Tech announced a proposed public offering of 150 milli convertible notes due in 2029 to expand its data center and develop ASIC-based mining rigs. On August 15th, BitDeer said the notes would be senior unsecured obligations of the company, which will mature on August 15th to 2029 unless converted, redeemed, or repurchased earlier. A senior convertible note is a type of debt security that can later be converted into an equity. It is a form of debt for the company that can also accrue interest payments. For the interest over time, a senior convertible note has priority over all the other debt securities issued by a company. BitDeer said hodlers may convert their notes on the second scheduled trading day immediately after maturity. And when the notes are converted, BitDeer will pay the holders with a Class A ordinary shares or a combination of the cash and Class A ordinary shares. And on August 16th, the crypto mining company announced that the notes would accrue an 8.5% interest rate annually. BitDeer said it would use the funds raised from the offering to expand and develop its business further. The company intends to use the net proceeds from the offering for the data center expansion, ASIC-based mining rig developments, as well as working capital and other general corporate purposes, as they wrote. Now, BitDeer Technologies is the world's 11th largest crypto mining company based on market cap, valued at roughly 870 million. The company trades above competitors like BitFuFu and BitDigital, according to company's market cap. And after it announced the convertible note sale, Google Finance interestingly showed the BitDeer stock price dropped by 18%. On the 5-day chart, the stock shows a larger price dump at 23%, going from $8.26 on August 9th to $6.33 at the time of this published article. BitDeer is not the only mining firm to suffer blows to its stock prices after announcing a convertible notes offering. On August 14th, Bitcoin mining firm Core Scientific saw a 10% drop in stock prices after announcing a 400 million senior convertible notes offering. The Mikey put for the win. Now for our featured story of the day. The headline reads here, as you can see on your screen: sovereign wealth funds could take Bitcoin to $148,000 per coin, according to this researcher. So let's break it down as the game theory continues in full effect. In the latest episode of the podcast, The Bitcoin Layer, Daniel Batten, a recognized advocate for the Bitty, discussed the potential impact of sovereign wealth funds on the Bitcoin price, predicting a rise to over 148,000 per BTC should these funds decide to invest even a minimal fraction of their assets. With 35.7 trillion under management between sovereign wealth funds and public pension funds, just a 1% allocation could have a significant impact on Bitcoin's valuation. And let's not forget forget, wasn't it BlackRock that released a research study recommending something outrageous, like an 84.9% allocation into Bitcoin into your portfolio? Let me know if you recall that one, family. Batten's analysis hinges on the sheer scale of assets managed by sovereign wealth funds and public pension funds, noting that even a fractional investment compared to their total assets could have a profound impact on the market. He explained if a 1% deployment into Bitcoin were to happen, we can calculate based on the current ratio of dollar invested to market cap increase that it would lift the Bitcoin price to over 148,000 per biddy. Now, why sovereign wealth funds are likely to buy the biddy? The primary roadblock, according to Batten, is not a lack of interest, but a lack of permissible investment frameworks within the funds, particularly concerning ESG, which we know is environmental, social, and governance criteria. All of the sovereign wealth funds want to invest into Bitcoin. It is not through lack of want. Batten quoted Kevin O'Leary, Mr. Wonderful or Mr. Not So Wonderful, highlighting that these funds are currently constrained by their ESG investment committees. These committees are yet to be convinced of Bitcoin's environmental credentials, which Batten believes are now significantly more positive than the general perception, marred by outdated information. That's right. And what comes to mind is Elon Musk, aka the Elon Musk rat. He stopped accepting Bitcoin payments for Tesla because he was also pushing that ESG FUD a while back, and he even claimed once we can prove that Bitcoin wasn't causing all the ESG FUD that he would accept Bitcoin payments. And obviously we have proven that Bitcoin doesn't cause this crap, and however, he has never came back and followed his word and started accepting Bitcoin again for Tesla. So Mr. Musk rat, I'm calling you out when we're going to be accepting Bitcoin payments again for Tesla. Holla at your boy. Batten suggested the ESG criteria, which are a significant factor in investment decisions for sovereign wealth funds, are based on data that is the latest or at least 3 years old and no longer accurately reflecting the current state of the Bitcoin mining technology and its environmental impact. There is a massive knowledge asymmetry where the knowledge that we have about Bitcoin and its environmental benefits is now so different to what the ESG investment committees of sovereign wealth funds believe about the biddy. In response to these challenges, Batten has not only conducted research, but also begun direct engagement with the sovereign wealth funds, aiming to educate and update their ESG committees about the latest developments in Bitcoin's environmental impact. His goal is to realign the outdated perceptions with current realities, thereby removing the barriers to their investment into Bitcoin. Supporting his theory, Batten pointed to recent investments by state pension plans in the United States, such as those by Wisconsin and Michigan, which we have covered on the stream, which, despite being small in scale, had significant media impact and positively influenced market perceptions. Wisconsin invested a total through Grayscale mainly. I believe their current position is around 160 million. That's nothing compared to their total assets under management. However, even that very small allocation had a major impact on the Bitcoin price that day. Overall, Batten believes that the sovereign wealth funds can not only contribute to a Bitcoin bull run, but they can also help stabilize and legitimize the market for broader, more conservative investment audiences. Moreover, he believes that it is more likely that SWFs will invest in Bitcoin than having another major nation state or big company like MicroStrategy. He concluded, yes, there is a blocker and there is effort required to go through it. And it is hard, but it is nowhere near as hard, in my view, as convincing a nation state to adopt Bitcoin. So this is an area where, whilst it is hard, it is not as hard as other areas, and it is also that there's only one blocker. There's not a whole bunch of them. And in most cases, that is the ESG investment committee. So fuck the ESG investment committee. Can I just be frank? Fuck them. Who cares? Fuck them all. There you go.